What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had a red day across the board with the Russell 2000 going down 2.36%, NASDAQ goes down 2.26%, Dow Jones goes down 0.80%, and the S&P 500 went down 1.26%. Basically, guys, and in practical terms, the tech sector went down a lot today. The big tech stocks that did the heavy lifting in yesterday's trading session, the Googles of the world, the Apples of the world, the Teslas of the world, today took a rest. And on top of that, we had also the financial sector lagging today. And on top of that, needless to say, SMH, the semiconductor ETF, a very important member of the tech sector, had a horrible day today, dropping almost 4%. Crude oil goes down 2.89%, gold goes down 0.53%, silver goes down 0.85%, the 10-year treasury yield goes up today 5.97%. The financial sector didn't follow the 10-year treasury yield, and the VIX, the volatility index, went up today 13%, and it is trading once again above 20 points, which is a very important spot for the volatility index. So what gave rise to the sell-off that we saw today in the markets? Well, the Federal Reserve Governor, Mrs. Let's just put it that way, Lael Brainerd, said that she expects methodical interest rate increases, which is something that the markets already discounted, that the markets already priced in. However, the second, Mrs. Brainerd, said that there will be rapid reductions to the Federal Reserve's balance sheet. Once she said that, guys, that's it. The markets dropped like a rock, because that is a matter that concerns a lot when it comes to the financial markets. The balance sheet of the Federal Reserve is strictly linked to the liquidity of the financial market. So anything that could be suggesting that the Fed is going to reduce its balance sheet in a quickly manner is something that is very likely to spook the market. So remember that tomorrow we have the Fed minutes of March, and this is something, or let's say that Brainerd was the preamble of what we are about to find out tomorrow at 2 p.m. Eastern Standard Time, once we get the Fed minutes of the last FOMC meeting that took place in March. So needless to say, guys, from 2 p.m. and on, you guys have to be ready to deal with a lot of volatility. When it comes to the sectors of the market, today we have, guys, the inverse picture relative to the one that we had yesterday. If you guys remember yesterday's video, I told you the defensive sectors were the ones that had a poor performance yesterday, and today the defensive sectors were the ones that led the rally. Utilities goes up 0.63%, healthcare goes up 0.21%, and consumer staples goes up 0.12%, and the sectors that led the rally today were the ones that had a poor performance today. Technology goes down 2.11%, and consumer discretionary goes down 2.33%. Another very important sector of the markets, financials, went down today 0.63%. This has been a very tough year for the financial sector, no doubt about it. When it comes to the advances and declines distribution, we can confirm that we had a very decent sell-off today in the markets, guys. 5,462 stocks go down, whereas 2,176 stocks went up. When it comes to the trades that I took in today's trading session, let me show you. Lucid Group, this is a trade that I started on April 1st. I purchased 200 shares at $24.84. I paid $4,968, and I decided to close this position. Lucky enough, guys, today, as soon as the trading session opened, and I was paid $5,204. I ended up making over here $200 $36. And I also closed another position on Lucid, guys, but with a covered call that I sold recently. So let me show you that position. And I also took a loss on AMD. Let me show you first the other trade that I closed on Lucid. So on March 24th, I sold 3 covered calls that expires in August. I was paid $615, and today I decided to close this position because I already had a decent gain, and I was thinking that maybe the NASDAQ 100, this was somewhere around noon. I was thinking that the NDX might that the NDX was going to be able to have some sort of rally. So I was thinking about selling other covered calls at higher prices. So I paid today $570 in order to close this position. I made over here $45. So I made in total $281 on Lucid. However, guys, let me show you over here AMD. I had to take a loss over here. I took this trade with a very tight stop loss, and I got stopped out. So in the case of AMD, this morning I purchased 100 shares at $108.38. I paid $10,837, and as soon as I started this trade, guys, and mostly because SMH, the semiconductor ETF, was having a very tough day, as soon as I started out this trade, I immediately placed a very tight stop loss, so I got stopped out at $107.39, and I was paid $10,739. I ended up taking a 100 loss over here. So long story short, I made today $180 in a red day, so I can't complain about my performance in today's trading session when it comes to trading. S&P 500 goes down today 1.26%, and it closed today's trading session at 4,525 points. So the bears, guys, did their homework to the letter. They closed the trading session below the 100-day moving average at 4,537 points. So the bears, as long as the bears can keep the S&P 500 below the 100-day moving average, we can make the case that they are gaining steam. However, I told you guys in the video that we posted yesterday that we are about to see the unfolding of a golden cross here on the 4-hour chart. As you guys can see, the 50 SMA might cross above the 180 SMA on the chart. This is obviously bullish. The S&P is no longer overbought. We can see the RSI sitting at 48 points. So when it comes to the bulls, the most important task that they need to carry out in tomorrow's trading session is going to be reconquering the 100-day moving average at 4,540 points. And in the case of the bears, they need to take the S&P 500 lower, guys, and preferably below the 200-day moving average at 4,486 points. And when it comes to the NDX, the NASDAQ 100, this index got crushed today, guys, down 2.24%, and it closed today's trading session at 14,820 points. I told you yesterday, if you guys remember, the 100-day moving average, this is critical. And why? Well, because the 100-day moving average has turned into an absolute nightmare, for the bulls of the NASDAQ 100. They haven't been able to close one single trading session above this moving average since mid-January, and they couldn't do it today either. So this is obviously encouraging when it comes to the bears. However, check this out, guys. The bulls managed to defend. The bulls managed to find support at 14,800 points. This is no coincidence. 14,800 points happens to be a previous area of support back from mid-August. So the bulls held an important area of support, and on top of that, we can already see the unfolding of a golden cross on the NASDAQ 100. You guys can see how this 50 SMA just crossed above the 180 SMA on the 4-hour chart. This is bullish. The NDX is no longer overbought because the RSI is sitting at 49 points. So obviously, we might see a lot of volatility tomorrow. So if the minutes happen to sound very hawkish, this support of 14,800 points is not likely to keep on providing a good support for the bulls. Let's just put it that way. And if the minutes happen to sound a bit dovish, which I don't think is going to be the case, then maybe we can see a retest of the 100-day moving average at 15,150 points. And the first stock of this video is going to be a stock, guys, that has gotten absolutely killed. Fubo TV. It goes down today 6.23%, and it closed today's trading session at $6.92. So obviously, guys, a very ugly looking chart, a clear downtrend, a technical downtrend. As of now, Fubo is trading below all the moving averages. However, it looks like the bulls of Fubo are trying to work out some sort of bottom over here, slightly above $6. So when it comes to Fubo, there is an interesting spot right at $8.20. And why? Well, because $8.20 is an area that coincides with the 180 SMA on the 4-hour chart, and on top of that, we are talking about a former area of resistance back from late March, also back from mid-March, and lastly, back from late February. So I'm thinking, guys, and taking into account that the RSI of Fubo is very healthy as of now, it is at 46 points. I think that if the bulls can take on $8.20 on good volume and momentum, they have a first shot of filling the next important gap up to $12. $12 happens to be an area of resistance in which the bulls of Fubo failed on many occasions back in February. So if we were able to take a trade from $8.40, $8.50, once we have confirmed from a technical standpoint that the bulls of Fubo already took out $8.20, so from $8.60-ish up to $12, this would be a 28% push to the upside. And mind you, guys, there is a very positive catalyst when it comes to Fubo coming up into the closing of this year, because this streaming service, this company is going to be broadcasting the World Cup, the soccer World Cup that is going to be taking place in Qatar between November and December, and that is something that might be beneficial when it comes to the fundamentals of Fubo. The second stock of this video is going to be Facebook. Meta Platforms goes down today a little, not a lot, 0.88%, way less relative to the S&P 500 and the NASDAQ 100, and Facebook closed today's trading session at $231.84. So it looks like the worst is behind when it comes to Facebook, unless we happen to see another big leg down when it comes to the NASDAQ 100 and the S&P 500. But it looks like the bottom is seen, guys, at $184. So I am going to zoom in here. On the 4-hour chart, we can see a clear uptrending channel on the 4-hour chart, and the 50 SMA on the 4-hour chart happens to coincide with the lower line of this uptrending channel. Sorry, I said horizontal channel. I meant uptrending channel. So Facebook is looking pretty well over here. We have a very clear resistance at $235. Facebook failed at $235 today, and it also failed over that area back on February 10th. So I'm thinking, guys, that if tomorrow we keep on seeing volatility when it comes to the NASDAQ 100, S&P 500, and so forth, if the Fed minutes happen to be a bit hawkish, I think that Facebook is very likely to pay a visit down to $223. $223 happens to be a previous area of resistance back from March 25th, and it is also a previous area of resistance back from mid-February. So this is a spot, guys, that, check this out, $223, as I just said, is a previous area of resistance, but $223 is an area that happens to coincide with the 50 SMA on the 4-hour chart and the lower line of this uptrending channel. So I'm thinking that this is an area in which Facebook is very likely to come across with buyers. So from $223 up to $235, we are looking at a 5% profit trade. And the third stock of this video is going to be AMC Entertainment. So the apes, what is going on over here? AMC got crushed today, goes down 9%, and it closed today's trading session at $21.21. So first of all, guys, AMC is no longer overbought, obviously, because AMC has been dropping like a rock since it hit $34. It is actually down almost 41%. Wow. Relative to the closing price of March 29th. So AMC looks way healthier as of now from a technical standpoint. I am going to zoom in here on the 4-hour chart, and the apes have a very important spot to defend over here, guys. $21. Critical spot, $21, happens to be a previous area of resistance back from February 10th. So as of now, AMC is trading above the 180 SMA on the 4-hour chart. That is hopeful. That's encouraging. Let's just put it that way. So watch out for a process of consolidation of AMC slightly above $21, because as I just said, that's a very critical spot in technical terms. So I'm thinking that if the bulls can consolidate slightly above $21, they could be gathering momentum in order to fill the next important gap up to $23. $23 happens to be an area of resistance in which the apes felt back in early January. So from $21-ish, $21.20 up to $23, get these, guys. That would be a 9% profit trade. And the last stock of this video is going to be Walgreens. Walgreens Boots Alliance. Full disclosure, guys, I sold puts of Walgreens today. Let me show you, by the way, the trade that I opened today on Walgreens. This is some sort of hedge. Let's just put it that way. Is this the... No, so let me... Okay, no, that's the wrong portfolio. So WBA. Let me see. So I sold two puts, guys. I sold the $45 put that expires in June, or on June 17, and I was paid today. How much was I paid for the whole thing? Let me see. I forgot. I was paid $600. So if we take a look at the technical chart of Walgreens, guys, this is a very ugly looking chart, clear downtrend. Walgreens dropped like a rock after it posted earnings. This was last week. This was back on March 31st. And take a look at the RSI of WBA, guys, 29 points. The stock of this company is severely oversold. That's a reason why I sold puts today, because I think that Walgreens is due for a relief rally that might take the stock of this company up to the next important area of resistance at $46. $46 happens to be a previous area of support back from early October and also back from early August. So any process of consolidation is likely above $43. I think that might be a sign that the bulls of Walgreens are planning on having a relief rally, and from $43-ish up to $46, guys, this is a 6% profit trade. So despite the fact that I sold puts today, I wouldn't rule out a regular trade with call options or shares over here if I happen to see the volume of the stock of this company going up, because that might be a sign that we might see a tiny relief rally up to $46. And mind you, guys, Walgreens is a member of the health sector, which is a very defensive sector, along with utilities and consumer staples. And the defensive sectors of the markets are sectors that usually go up when the rest of the markets go down. So if we have a nasty day when it comes to the S&P 500 and mostly the NASDAQ 100, technology, growth stocks, higher multiple stocks, and so forth, Walgreens is a stock that might be able to pull off a green day. So from where I sit, having a position on a very safe stock such as Walgreens is also some sort of hedge, because I am severely invested on growth and tech-oriented stocks. And with Walgreens Boots Alliance, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. I'm sorry. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, as well 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday, once again 3 or 4 hours after the market closes. Peace out.